In this video, Jim Cramer examines the current turbulent state of the stock market, attributing the significant downturn to the uncertainty stemming from President Trump's policies and rhetoric. He highlights how fear regarding issues like tariffs and trade deficit is undermining investor confidence. While acknowledging that poorly performing stocks can decline, he contends that investors shouldn't have to suffer for the volatility created by external anxieties, advising against selling promising stocks until more transparency from the government is established to stabilize the markets.
He gets to set the agenda. He's doing exactly what he said he would do, what people voted for. But, man, I think there are much better ways to go about doing what he's doing. He can implement his agenda without destroying investor confidence and causing the stock market to roll over. So I'd rather offer my plan now that, rather than wait until all the averages are down 10% like the NASDAQ, at which point it'll already be too late. Will any of my ideas be cogent, actually adopted? I don't know. I've only advised one president, and he loved my idea over Diet Coke, but nothing ever happened. As a rule, people in the White House only care about what I have to say when things get real, real bad, like when COVID almost shut down the entire economy in 2020. But that doesn't matter. In Rocky III, Mr. T, a.k.a. Clubber Lang, ultimately ended up flat on the canvas. His prediction didn't come true. Yet the pain's already coming true here for anyone who owns stock. Today was horrendous and, again, unnecessary. We do not need to end up on the canvas every day like this. First problem, we have zero clarity and maximum uncertainty. Business is going to slow down. Hiring in the USA will get crushed if we don't get some clarity here. Tomorrow, I think we have a weak non-farm payroll report, first of many soft numbers, and we don't unless we get rid of this surprise factor stuff. Remember, most businesses hate the tariffs, but that really terrifies them is that they have no idea what's coming next. Second, the president's threatening to roll out more tariffs. The staged tariff schedule is creating a huge amount of uncertainty. If the president already knows what countries he's going to hit and what products will be made more expensive, perhaps German, Japanese, Korean cars, there'll be more pain, but it can be planned for. Tell us now. This is a mess. The president should go on Truth Social, though, and do this. Show all the tariffs that these target countries have against us. They do not have clean hands. We need our citizens to know what our trading partners are really up to. They have systematically discriminated against us. They protect and subsidize their own industries, while we just have to sit there and take it. So show it to us. Tell us. Don't make us try to figure out who's next. Explain why we're simply going tit for tat, because people don't understand why this is necessary. Third, the president has sowed enough fear that almost every company that reports during this period is giving a cautious forecast, and it's totally out of keeping with how well they're doing. Nobody wants to come out and say, hey, it's too crazy out there. The president's seen the problem. Trump has said there will be pain. So now you think, why should you stick your neck out? If you run, say, a major retailer like Macy's and predict you could have a great spring. So even though Macy's did have a terrific winter, they got it so negatively, people sold the stock. Negativity is pervasive throughout this entire economy, and it comes from the top. Again, this is unnecessary. Trump can accomplish his agenda without doing this much damage. Remember, investing is a good thing for our country. Our stock market's now falling way behind Spain, Italy, France, Germany. More on that later. These foreign markets seem like more certain and welcoming places to put money in. No mandated negativity. No sense of everyday lower prices for stocks, the Walmart style of governing. They're taking our investing dollars for certain, and I can't blame anyone for moving their money. Fourth, if we want the consumer who has enough money to keep spending, we need to maintain some degree of wealth effect. It's not a subsidy. It's capitalism. I think the consumer's baffled by the president's tariff policy. People are confused about why. For example, the president's treating Canada as a scofflaw on fentanyl when it's obviously a Mexican problem. If Chinese steel's coming through Canada and punish them equally with Mexico. But Mexico and Canada present very different problems, and that's insane. They're being treated the same. People know that's not right. Fifth, nobody wants to be a sucker. The president knows that. We don't want to feel like doofuses for putting money into the stock market. Saving's a good thing. We want people to save. But right now, it's not worth it. The real winners at this red-hot minute are all short sellers. No one will want to come public in this kind of environment. IPOs, no. No one will want to merge. Everything's frozen because everyone's too scared, suboptimal. Sixth and final, when we get the employment number tomorrow and it shows a lot of layoffs, we do not fear a plethora of job losses stemming from the federal layoffs. We get that part of the president. That's his plan. You don't have Chainsaw Musk in there for nothing, although it might be for nothing if we get that more Supreme Court rulings rolling back these firings. But confidence gets sapped on days like today. Anyone who hires right now feels like a dope if their stock keeps going down. There's not enough confidence to hire. That's in large part because we don't know what's going to happen next, other than it could be real bad. Look, if the market's going to go down, so be it. If a company reports a series of bad numbers, ones that are well below forecast, it should get the clubber-lying treatment. If the vast majority of important companies, large vital companies, perform poorly, then their stocks should go down. The market should go down. However, that's not the case. Instead, companies are reporting terrific sales and earnings, but then they've given all these downbeat forecasts and paying because why? Well, they're confused. They're doing it because they think it's only going to get worse before it gets better, because that's what the president's telling us. That's what he's telling us. Why not give us an upbeat forecast? Consumer confidence is so negative, you can't. You get crushed. Because what's really happening is your price-to-earnings multiples are shrinking because we sense a mandate for lower prices. So why not just sell? And the mandate, it's not coming from Wall Street. It's coming from the White House. I say let poorly performing companies see their stocks go justifiably down. Let the prediction for them be pain. But the good ones, here's the bottom line. I'm not saying there should only be pleasure. That's wrong. I'm saying that the shareholders of great companies shouldn't have to play the fool. And people need to know it's still worth investing. There's no reason it has to be you have to be stupid to buy stocks. But you sure feel like a dope if you bought today, don't you? You feel like a dope if you bought any day since the inauguration. Wall Street hates uncertainty, and until we get some clarity from this administration, it's going to be tough to advise people to buy anything, even the best companies, because pessimism is the only path investors seem to know. Robert in Jersey. Robert.
Yes. How are you, Jim? First-time caller.
All right, Robert.
Show, Jim.
Thank you.
Love the show. My question is U.S. Steel. With everything that's going on, what do you think about investing in U.S. Steel?
No, if you're going to own a steel company, you have to own the best. We're best of best people in this. We are best of breed people in this. And that is Nucor. At 131, I think it's a great buy. That's the one I want you to buy, and I will always want you to buy. John in North Carolina. John.
Good afternoon. How are you?
I am good. How about you, sir?
Just fine. Got a question?
All right.
I've taken your advice and put a little bit of cash aside to play with in case something comes up. And a couple of weeks ago, I bought some Eli Lilly, and it's taken a pretty good jump. Do I cash it out or do I let it ride?
You don't sell Lilly. Lilly's got the solution that may be good for everything from Alzheimer's to heart disease to kidney failure to liver problems. And right now, weight and diabetes, and that at GLP-1. And Lilly's got the big lead. David Ricks is a visionary. We stay long that stock. Right? Wall Street hates unknowns. And until we get some certainty from the administration, even if ultimately they're doing the right thing, we ain't going anywhere here. And my prediction will be
the House of Pain.
Mad Money tonight. It's a volatile market. And tonight I'm sitting down with one of the top investing minds, Ken Langone. You got to listen to him. Then Cracker Barrel's soaring after earnings, up a whopping 7.5% after its report. Could the company's turnaround continue to look appetizing in this market? I'm talking to the CEO. And the parent company by Gap, Banana Republic, and Old Navy just reported after the bell, and it looks spectacular. And we got the CEO exclusively. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.